Health Check is a feature found under Fund Graphs for premium subscribers that assists you in visualizing the overall health of a company. This is done by comparing a few important metrics to the sub-industry standard. Please keep in mind that this is not the ultimatum for determining if a company is healthy or not, but instead gives you another picture of how a company compares to others in its sub-industry. Currently, the list of available metrics in Health Check are margins, return on assets, return on equity, asset turnover, and long-term debt to capital. Under the margins metric, you'll find 3 sets of graphs: gross margin, operating margin, and net margin, each containing a stacked chart. The top of the stacked chart is the health scoring system. It represents the percent difference between the selected metric and the sub-industry average. The range of the health check is 34% above and 34% below the average, roughly representing 1 standard deviation. The green area represents when the company has performed better than the sub-industry average, and the red area represents being worse than the sub-industry average. In short, the longer the bar is, the better or worse the company has performed compared to the average, while the smaller bars show the company performed close to the average. While the top of the stack chart represents the percent difference, the bottom of the stack chart displays the actual values of the company and the sub-industry per year. The remaining metrics have 2 charts each. On top, they have the stack chart representing the same relationship as margins. The bottom chart contains the 2 associated metrics that are used to calculate the health check metric. For example, return on assets is calculated by dividing net income by total assets. This graph below shows these 2 items graphed to give a better understanding of how ROA is changing on a year-to-year basis. The final point to notice is that above the sub-industry average does not always necessarily mean a good thing. This is the case for long-term debt to capital. For this metric, notice the green and red areas are swapped. Red is on top and green is on the bottom. Since this represents leverage, it is considered better for a company to be below the sub-industry average, meaning it has less debt than its competitors.